Hey friends, welcome to the channel. Ask yourself one simple question. What is the ultimate oil of our time? Right now, in the spring of 2026, it's not gold, it's not Bitcoin, and it's not even real estate. The ultimate oil of 2026 is data and artificial intelligence. We live in an era where neural networks write code, diagnose medical conditions, manage the logistics of giant corporations, and even invest in the stock market. Companies that manufacture the brains for this AI, like NVIDIA, are worth trillions of dollars. And naturally, the entire crypto market has gone crazy. Every single day, hundreds of new tokens launch with the letters AI in their name. Developers attach a ChatGPT API to some smart contract on Solana. Call it decentralized artificial intelligence, and collect millions of dollars from gullible investors. And then those coins crash by 99%. The crowd always looks for gold where it shines the brightest. But smart money, the institutions, Wall Street, and the corporations in Silicon Valley knows a secret. The real money in a gold rush isn't made by looking for gold. It's made by selling shovels and pickaxes. Today, we are going to talk about a project that, right now, is becoming the fundamental infrastructure, the ultimate pickaxe for the entire global artificial intelligence industry. A project whose board of directors includes the very people building this AI: Google, IBM, Dell. We are talking about Hedera Hashgraph technology and its token, HBAR. Every day you ask me, when will HBAR be worth $1? Is that even realistic? Today I am going to prove to you, using dry math and corporate insights, that the merger of AI and Hedera makes the one mark not just realistic. It makes it a mathematically inevitable, conservative target for this cycle. Get comfortable. Turn off your notifications. Today we are hacking the matrix. To understand why Hedera is going to swallow this market, we need to understand the massive, colossal problem hanging over the artificial intelligence industry in 2026. This problem is called the crisis of trust. Look, neural networks have become incredibly smart, but AI is a black box. It gives you an answer, but you don't know exactly how it arrived at it. Imagine you are a major bank. You use AI to approve loans or manage a multi-billion-dollar portfolio. Or you are a medical corporation, and your AI is searching for a cure for cancer. Your AI trains on millions of terabytes of data from the internet. But what if hackers slip garbage into that data? What if they poison the training set? The AI will start giving incorrect, critically dangerous answers. For a corporation, this means billions of dollars in lawsuits and the total destruction of its reputation. The second problem is deepfakes and copyright. In 2026, when a neural network can generate a video or voice indistinguishable from reality, how do you prove that a video of a CEO or a president isn't a fake? How do you prove that a piece of news is authentic? Artificial intelligence desperately needs a trust layer. It needs an independent, incorruptible, mathematically verifiable audit log. A place where a cryptographic fingerprint of every file, every dataset, and every AI decision can be recorded. And if you say, well, let's just use blockchain for this, Bitcoin or Ethereum, you will simply be laughed out of any corporate office. Why? Because AI generates millions of transactions per second. Ethereum does 15 transactions per second and charges outrageous fees for it. Solana does more, but it periodically crashes or glitches. Classic blockchain is physically incapable of digesting the volume of data that artificial intelligence generates. And this is where Hedera Hashgraph rides in on a white horse. Hedera is not a blockchain. It is a directed acyclic graph running on the Hashgraph algorithm. And this technology has one specific tool that is currently driving AI developers crazy. This tool is called the Hedera Consensus Service, or HCS. Let me explain this simply. HCS is the fastest, cheapest, and most reliable digital notary on planet Earth. When a corporation collects data to train its neural network, It runs this data through HCS. Hedera takes a cryptographic Hasha digital fingerprint off this data and permanently embeds it into its distributed ledger. What does this do? It provides fair ordering and an absolute timestamp. No hacker, no corporate employee, nobody in the world can alter this data retroactively. If the AI makes a mistake, engineers can rewind time, check the logs on the Hedera network, and with 100% mathematical certainty say, aha, right here, on March 12th at 2:00 p.m., poison data entered the system. And now for the sweetest part. Do you know why corporations choose HCS from Hedera over other networks? Because of fixed fees. One transaction on call to HCS on the Hedera network always costs exactly 0.0001, 1/10,000th of a cent. Always. It doesn't matter if the HBAR token itself costs 10 cents, $1, or $10. Imagine you are an AI startup. You need to verify 1 million logs a day. On Hedera, that will cost you $100. On Ethereum, you would go bankrupt in your first hour of operation. Hedera allows AI applications to scale to unbelievable sizes while keeping costs at the level of a statistical rounding error. Now let's look at who exactly is behind Hedera. Because in crypto, you can invent any genius technology, but if nobody uses it, it will die. The Hedera network is governed by a governing council, and if we look at the makeup of this council in 2026 through the lens of artificial intelligence, you will get goosebumps. These are not random companies. These are the architects of global AI. Google, the top AI giant on the planet, creators of the Gemini neural network. They run their own node on Hedera. IBM, pioneers of enterprise AI with their Watson system. They are integrating AI transparency technologies. Dell Technologies. You know them for making laptops, but Dell is one of the world's largest suppliers of servers for AI computing. They build data centers in partnership with NVIDIA. And right now, Dell is actively using Hedera to verify data in edge computing. Hitachi, the Japanese giant that integrates AI into heavy industry. Trains, nuclear plants, factories. They desperately need the data security that Hashgraph provides. Put the puzzle together. These companies are not going to buy meme coins on Solana. They are not going to use Ethereum with its $50 fees. They already sit on the governing council of Hedera. They govern this network themselves. Their lawyers approved this code a long time ago. When the corporate sector needed to combine the power of AI with the transparency of Web3, they didn't go looking for something new on the market. They took the very infrastructure that they already control, which has absolute legal clarity and zero risk of forks. They took Hedera. In 2026, AI agents autonomous programs that perform tasks for humans are starting to communicate with each other. An AI from Google wants to buy data from an AI from IBM. How will they pay? With a Visa or MasterCard? No. They will use microtransactions powered by Hedera. Fast, borderless, and for fractions of a cent. This all sounds amazing, you might say. But what does this have to do with the price of the HBAR token? How will this corporate utopia get us to that coveted $1? Let's do the math. Let's turn off our emotions and turn on the calculator. Hedera's main problem in past cycles was token inflation. Out of the 50 billion maximum supply, only a small fraction was floating in the market. Developers constantly unlocked new coins, dumped them on the market, and this drove the price down. The chart just laid flat on the bottom. But welcome to the spring of 2026. The inflationary nightmare is officially dead. The vast majority of coins over 80 to 85% are already in circulation. The emission tap has been turned off. Now follow the logic of how the algorithm works. For a Dell platform or an IBM AI agent to use the Hedera consensus service to verify their data, they need gas. That gas is the HBAR token. The corporation cannot just come and pay in fiat dollars. The algorithm demands HBAR. Therefore, the corporations or their brokers go to the open crypto market and buy up HBAR from exchange order books. Then they load them onto their balance sheets, and the network burns or distributes microscopic fractions of these tokens for every single transaction. As more AI applications are deployed on Hedera, more transactions per second pass through the network. Millions, tens of millions of transactions a day. The corporate sector turns into a giant, soulless, 24/7 liquidity vacuum cleaner. It doesn't care if it is a bull market or a bear market. Their business operates every day, and they need HBAR every day. And what happens? There are no new coins hitting the market because inflation is over. Retail investors are staking their HBAR, removing it from circulation, and corporations are nonstop buying up the remaining tokens to pay for the gas of their AI systems. This causes a classic textbook supply shock. Market makers wake up, open the order books, and see that there is simply no cheap coins left, and the price begins a parabolic ascent. Let's verify the math of $1. At a price of 1 per HBAR and current circulation, the market capitalization of the project would be around $40 billion. Is that a lot? Remember 2021. The empty Cardano blockchain was worth $90 billion. The meme coin Dogecoin was worth $80 billion. Valuing the absolute best DLT infrastructure on the planet, which has become the circulatory system for global AI transparency and the RWA sector, at a laughable $40 billion. Friends, $1 for HBAR is not a Reddit pipe dream. It is a conservative, minimum, baseline target for the 2026 bull cycle. If total euphoria kicks in, we could easily see 1.5 or even 2. And now we come to the most important stage. Why won't 90% of you watching this video get rich, even if HBAR breaks $1 tomorrow? Because between seeing $100 on the screen and withdrawing $100 to your bank account, there is a giant abyss. That abyss is called greed. When HBAR reaches 90 cents, the internet will go crazy. Influencers will scream, "We are flying to $5, don't sell." And you, blinded by the numbers, will decide to wait. But at the 1.05 mark, giant whales and venture funds will hit the sell button, crash the market, and you will ride your unrealized wealth all the way back down to 15 cents, cursing everything in the world. To take money from the market, you need the discipline of a sniper. I offer you the laddering out strategy. Write this down. Step 1. Capital preservation right now. Get your HBAR off centralized exchanges. Exchanges get hacked, accounts get blocked. Buy a cold wallet or download Hashpack. Send your coins into native staking, choosing an official node of the governing council like Google. The coins are not locked. They stay with you, but you receive passive income. While you wait for $1, your HBAR stack grows on its own through compound interest. Step 2. Lock in profits at the 0.5 to 0.6 mark the old all-time high. When the price breaks the old all-time high, turbulence begins. You sell 20% of your coins. Why? Because when the price grows from the current bottom to 50 cents, selling just 1/5 of your bag gets you 100% of your initial investment back. You've recouped your deposit. You are no longer risking anything. Your heart rate returns to normal. Step 3. Front-running the crowd at the 0.85 to 0.9 mark. We are approaching the coveted dollar. There are millions of limit sell orders sitting there from the greedy crowd. We must front-run them. With a stone-cold face, you sell another 30% of your position. You lock in massive clean profits before the price hits the concrete wall of psychological resistance. Step 4. Euphoria at the 1.1 to 1.2 mark. If the momentum breaks $1 and we fly up on short squeezes, mass media hysteria begins. You calmly sell another 30%. At this stage, you are a multimillionaire relative to your initial deposit. You have pulled 5 to 10 times more out of the market than you put in. Step 5. The moonbag. You have 20% of your coins left. What do you do with them? You just let them sit there. Forget about them. If the artificial intelligence narrative creates a supercycle and HBAR flies to 3 or 5, this tiny remaining piece will bring you absurd excess profit. If the market crashes into a bear winter after $1, you won't care at all because you already took 80% of your money at the absolute best prices. Let's sum it all up, friends. We are at a unique point in history. The artificial intelligence boom is not a passing trend like pictures of monkeys. It is a fundamental shift in the human economy. But AI cannot function without trust, transparency, and immunity to tampering. It needs an architecture, and multinational corporations have already chosen that architecture. They chose Hedera Hashgraph. With its fixed fees, the absolute finality of the ABFT algorithm, and governance from giants like Google and IBM, the inflation of the HBAR token is over. Organic corporate demand is just starting to gain momentum. A supply shock is inevitable. $1 for HBAR is not just a pretty number to get views on YouTube. At a market cap of only $40 billion, it is a completely logical, fundamentally justified price for the circulatory system of the global corporate Web3 and AI transparency. Your job right now is not to jump from side to side trying to catch 100x on meme coins where market makers will wipe you out. Your job is to methodically accumulate a fundamental asset, throw it into safe staking, and coolly wait for your targets, locking in profits by laddering out. Nobody will take care of your future but you. Be smarter than the crowd. Friends, I am incredibly interested in your thoughts. Do you think AI will be the main catalyst for HBAR in 2026? What is your average buy price right now? And at what exact levels do you personally plan to hit the sell button? Let's discuss it in the comments. I read everything. If this video helped you build a clear plan in your head, if it gave you an understanding of the fundamentals, and relieved your anxiety, smash that like button. For you, it's one click, but for the YouTube algorithm, it is a massive help. Make sure to subscribe to the channel and hit the bell so you don't miss our next urgent breakdowns and get the signal to take profits right on time. Keep a cool head, control your greed. And remember, wealth goes to those who see infrastructure where everyone else only sees hype. Thanks for watching. Massive profits to you, nerves of steel, and I'll see you in the next videos. Bye!